Stock market today analysis for October 19th, 2022. The Nasdaq down by 0.85%, S&P 500 down by 0.66%, U.S. Treasury 10-year yield up 11.8 basis points. That's a high amount of rising in one trading day. Gold down by 1.32%. Bitcoin up 0.15%. Oil up 3.09%. I'm really happy about that. You may or may not know, but I've had a little option trade on the WTI futures. And I needed to stay a little bit higher where it's at now, just a little bit longer. And your good buddy Brent's going to be exiting with a little bit of profit quickly. I'll take that risk off the table. Tesla reporting after trading hours, and it's definitely after trading hours. It's probably like getting close to 8 or 9 o'clock Eastern Standard Time. IBM after, Procter & Gamble was before. We got these different earnings going on. Personally, I have not been trading in such a way where the earnings reports particularly affect me too much. It's not to say that it's not at all, but I haven't been, depending on what type of trading. If you're just doing long-term investing, you're going to ride it out regardless of whatever earnings reports are, right? But if you're doing certain type of trading, you want to be aware if your stock is reporting. If you're trading a stock of a company, if it's reporting, you want to take the appropriate action based on what your trading style is. Some people, like if you're doing some kind of swing trading, you probably want to not be swing trading during the earnings trade, but maybe you're going to do options trade on earnings. So you got to know when the stock's reporting, so you can put on that trade in the appropriate time before going into earnings. So feel free to go to stocktwits.com/earnings-calendar and look through there and make sure that you are taking appropriate action for yourself based on whenever the earnings are coming up. The VIX up today by 0.85%, little uptick in there. And let's look at the max. All right, we see max way up here. VIX is up here around 78. That was in a 2008 subprime housing market crash, financial crash, monetary crash. Hey, whoever you are, maybe you got a different term to call it, but whatever name you want to debate on what it should be called, definitely the VIX went super high. Right over here, this is around the whole health stuff, and that VIX was up to 66. So, when the VIX goes real high, it might not happen often, but it's a time where you can buy some stocks at a discount. And right now, we've been slowly moving up. Right? We're not down here in the 20s anymore. We're up here in the 30. Right? You get around here. What is that? 40 from this line to 40 going up. Maybe that's when you can get some good discounts. Even right in here, maybe at 38. So pay attention to that. When the VIX is high, you buy. When the VIX is low, you go. Speaking of high, the MMRI continues to climb higher, closing today at 289.40. And when I first started graphing this back in August 29th, it was at 210. You can see anywhere from 200 to 300 it's in the high risk zone, but we're really getting closer to this. We're pushing to the extreme levels of risk. Now, right now, the VIX doesn't really does it correlate with that? Yeah, we're not down here in the 20s. but we're not up here closer to 40s, right? We're closer to 30 than we are to 40. We're not even we're not even at the halfway of 35. So keep your eyes open on those things. Another thing that we see going on, all the yields on the treasuries up today. The 13-week up about 1 point, a little bit over 1.5, 5-year up 3.2, 10-year up 3.23, and 30-year up 2.60. If these treasuries continue to rise, if the yields on those continue to rise, then we know I don't know if we know it. It's reasonable to assume that this will keep rising. At some point, probably this will be rising. So those are some other things you can look out for. And just stay nimble, my friends. Stay nimble. And to look at specific equities, S&P 500, kind of a down day. And a lot of these patterns, if you just look at the last 3 candlesticks, you potentially could see some head and shoulders pattern. Okay, I'll be honest with you. I looked at these previously to making this recording, so some of them straight up look like a head and shoulders. Right, this one kind of looks like a head, but it's like a head, but someone that has needs some chiropractic work shoulder here. So you got this really low shoulder and this kind of like the frozen stiff shoulder on this side. So, but what do we see going on? We see just not a whole lot of action, right? You can see that in the daily, inside of the daily candle, it dropped down a little bit, but there's this bit of sideways motion, and this is the big picture of it. It's fighting this 25-day moving average. So yesterday it traded up above it, but today couldn't really maintain that. A lot of times this would be considered a doji candle, and that is, it's kind of an indication of indecision, change of direction, could be kind of like resting, digesting of information. If you think about if you're out exercising, running and sprinting and things like this, there's going to be certain times where you're going fast, and other times you kind of slow down, right? So doesn't necessarily mean it's going to change direction, but the direction over the last couple days has been up, and we see that here reflected in this daily stochastic. This is a kind of a short-term stochastic, and we see that with this candle. It closed here. This one closed here, but it's still up from where it opened, right? Up, up, up. Now kind of could be coming down, and we're looking at, being on top of all this pressure here, these moving averages. So it could be that what we are seeing is high, lower high, lower high, lower high, lower high. Could be. But in the meantime, right, we also have our, right, we got a low, lower low, lower low, lower low, lower low, lower low. Now, could it be building back up? I don't know. I'm just seeing, that's kind of what I'm seeing. It's a little bit subjective though. Maybe a little bit, maybe a lot. Now, your call. Low amount of volume. Right, we got definitely more sellers and buyers, but the volume was a little bit low. Not even getting. There's a gap between this yellow line, which is the daily average, right? Yesterday it got closer. Today it's not even really that close. The big term money still flowing out of it. So yeah, maybe we're going to see more movement to the downside. I'm still kind of thinking that maybe the earnings season is going to rally things up, but if that's what's going to happen, it's got to do it better than this. All right, so the technology sector, again, we're getting really weak volume. Look at that. It's like half the amount of volume. Money's still been flowing out. We got a similar look here. This is a little kind of looking more like a head, two shoulders over here, battling that 25-day moving average. We got with the technology sector, you know, look, it's almost a mirror image of the S&P 500. High, lower high, lower high, lower high, lower high, lower high, low, lower low, lower low, lower low, lower low, lower low, lower low. So it really just seems to be trading in this downward trend, and if it's going to reverse that trend, we've got to see some more strength getting through this 25-day moving average. Obviously, for this sector, between the 25-day and the 50-day moving average, that's some distance there, and you got these little, we have this, you know, resistance zones to go through around 28.50, 24.90, right? It needs some power to get through there, and this is not showing us power. Healthcare, okay, a little bit different picture, meaning that it's way more of a shoulder and a head. That's really got a good head and shoulder pattern there. What else is different about this is it's still closing above the 25-day moving average. Now this one's battling that 50-day moving average and just dropped way down here. So opened here today, right? Yesterday, kind of battling that 50-day. Today dropped down almost a little bit higher than where it closed on Friday. Selling brought all the way down here to below that 25-day moving average, and buying pressure just pushed back up. So it seems like the battle between the buyers and the sellers, there's still more sellers coming in, or at least more selling volume coming in, and it's a wide range, right? So this one seems to have some inertia to it, where you got a lot more range of trading than our previous two stocks that we looked at. Now this particular sector, healthcare, I think makes up around something like 13 to 15% of the S&P 500, where the one that we looked at before, the technology, that makes up maybe somewhere around 25-ish. So this is going to have a bit more impact, unless whoever decides like which sectors make up which amount, until they start changing it, which they have been, but until they start putting more weight into this, you know, switching these, like maybe having this one be closer to 25-30% and this closer to 10-15%. That'll help push the S&P 500 up a bit more. But until that happens, it hasn't happened. Volume a little bit lower on the volume today too. We do got a green candle. I thought the candle was green yesterday, so it's probably just wavering, like, you know, not quite enough money flowing in, not quite enough money flowing out. In fact, we could double check that by doing something like this. Nope. Yeah, seems to be possibly enough money flowing in there to have it be green. And so we will be watching that. But nonetheless, right, head and shoulders pattern. A lot of times these patterns break to the downside, and that's what it looks like it's going to happen here. Maybe it'll. Let's see what happens, especially throughout the end of the week with this. Well, I guess it's only 2 more days till the end of the week. But if this one can stay in this range above the 25-day moving average, it's going to close the week under the 25-day moving average. Speaking of the week, on Sunday, I post a weekly chart review. So make sure you're subscribed so you can get that one. And instead of looking at these candles, which represent 1 day, we look at a candle that represents 1 week. So 5 of these in there. And when you look at a bigger picture, it's a little bit easier to see what's going on. And then here, you know, maybe you're looking at another little head and shoulder pattern here, shoulder, shoulder, head. Really kind of getting light on the volume overall, but more sellers, more selling volume, and seems to be catching some support right here at that 31.72, right above that 25-day moving average. So the financials, healthcare have been closing above the 25 but stuck under the 50-day, and we'll see. Same thing, we want to see if it can keep closing above this 25-day and creating a base through that. But maybe it can if there's going to be some, you know, basically if there's more sellers than buyers, but it's like a light amount of sellers, but there's light amount of buyers. Yeah, we'll see. I mean, on this one, like on this one, if I was so inclined, I might look to I would be looking to play it to the short side. And you know, I don't know. I haven't looked today or this week at what the premium's like, but you know, this one maybe you can get a good amount of premium to sell a call spread above this 50-day moving average. You know, how far can you, what kind of premium can you get going further away? Because more than likely it is not going to be breaking up through here past 33.60. And if you can get some decent premium at 34 for how long, or what else would be good to do on that? I mean, me personally, I wouldn't want to be selling any put options down here, because I'm more concerned about things breaking to the downside at some time. But you know, short-term put option, maybe you could do that. Oh, maybe you can't. Maybe you don't like put options. I don't know. You gotta check with your own financial advisor. That's not me. So now over here in consumer discretionary, what's going on over here? Real weak candle, doji candle here, kind of stuck here, floating around in this. Some real weak volume. We'll see. I think, you know, whatever Tesla comes out with on the earnings, maybe that information will push this one way or the other tomorrow. But looking pretty weak. I wouldn't be surprised if we're going to be at least testing this again. Although we got this little bit of an uptrend coming up, but it seems like it's running out of momentum. I mean, look, just compare the red candles to the green candles. You know, you got more, definitely have more selling pressure pushing here. So in the short term, maybe it's kind of going up, but it just seems like consumer discretionary sector overall is going down. There, we got something a little bit different over here. All right, and yeah, you know, if you go back far enough, you start seeing just like more red than green as far as what's been going on more. But we had this low here, right? So we could go, could do something like this. We got a high, lower high, lower high, lower high, lower high. How many of these high you got to do? Lower high. Okay, but look at that. Here would be another lower high. But now maybe we're getting a change. So you got your low, lower low, lower low, lower low, lower low, lower low, lower low. But you know, look at that. Not really a lower low, right? And also look what you have going on here. You got a higher low. All right, maybe you got this one, but that's not a lower low. It's a lower low from right here, but not from here. And then you back to here again. Oh, look at that. Maybe you got a low, higher low, higher low, higher low. Potentially could have your come on. So it seems to be kind of potentially building a channel right in here, right? You can kind of see that sideways. If there is premium and you could work things out, you know, selling call options up here and selling put options down here, maybe iron condor, maybe just however you want to do it, that might work. You could maybe play both sides. I have no idea if there's good premium there. I have no idea. But just, you know, looking at this, what could you potentially do? Might be safe to, if you wanted to own this for long term, maybe selling a cash secured put option down here. Where exactly where might I sell that? Yeah, look at that. Still got low, lower low. You know, depends if you want to get assigned or not. But see this big gap, right there? It's that gap right in there. So if prices drop, they're probably going to come back down to here. So I don't know if you could get any premium for selling something with a strike price around 80 bucks or something like that, but it seems to be putting in a good amount of support right in here. But again, you know, I'm not your financial advisor, so you know what you should do? You should paper trade. You should just put a paper trade on and find out. IWM. Okay, shoulder, a little head right here. Those have a tendency to break to the downside. We'll see if that happens. Now this one we had a little more higher volume. Definitely, like, look at all that red overall, and which would make sense, right? We're just in this downward trend, but we are making this little W formation there. You got a little W here, went up. Here's kind of this weak W right here. So, but if we do it like, also we could do it like this. Maybe we gotta put a bottom in here, put a bottom in here. I think it's maybe a short-term bottom. like when in doubt, look at the 200-day moving average. That's showing you it's in the past, but it's showing you what the trend has been in the past, and it's down, right? This stock is having trouble just getting above the 200-day moving average. You know, you see where your trend is. It's going down. Maybe it's basing. Maybe. Qs, potentially shoulder, maybe a little head poking up there, right? Can't get above this 200-day or the 25-day moving average. Hey, at least we have some more buying volume in. But look at this. Even though there was more buying volume than selling volume, look what happened with the candle, right? Sellers press this all the way down. The body of your candle is in the lower range. And this candle right here, this negative bear candle, the candle today opened below where it closed and still closed where below where it closed. So even though it's a green candle, you know, in conjunction with everything that's going on, I take that as a bearish signal. So not looking too good. Now the dollar. Now there you see something different, right? Now look at that. That's a stock that's going up. Yesterday I talked about what's going to happen, how it's been touching this 25-day moving average and bouncing off, and that's exactly what happened. Gapped up a little bit up here, even though that's a weak trading range. Look at that. Or trading range for the day. Gapped up, but basically kind of just went sideways, right? Compared to like this candle, which I don't know how to easily go back there. I guess we could figure out a way to go back there, but I don't feel like doing that. So I got money still flowing into the dollar. Dollar up, maybe other assets down. But something to keep in mind is, what is it you're trying to do? You know, because if you, let's say you're looking at a stock of like Johnson & Johnson. This is a company that's been around probably about 100 years. They're probably going to be around for at least another 50 years, maybe another 100 years. And are you buying the stock because you want to sell the stock at a higher price? Is that what you're doing? Or are you less concerned about the price you can sell your asset for? Are you more concerned about accumulating assets? Because if you're more concerned about accumulating assets, then it might be, you know, you might take a different look at it. You know, for example, I have a fourth of an ounce of silver here. I don't really care if I could sell it for more right now than I bought it for. I don't care about that. Because even if the dollar exchange rate for silver goes down, an ounce of silver is still an ounce of silver. A share of stock is still a share of stock. No matter what that dollar exchange rate is, your asset is still your asset, right? As long as Johnson & Johnson is in business, as long as whatever, you know, if you're doing exchange trade funds, as long as that fund is still in business and you have an asset and maybe it's giving you a little bit of a dividend, you know, and it's something that you can add to your balance sheet, you gotta look at it and figure out for yourself what is your big picture goal with it. And also realize that you can have a big picture goal with like smaller goals going on inside of it. You know, for example, sometimes I day trade, scalping little trades on oil futures. I'm doing that while I'm also, you know, have long-term investments in other things. So, and also sometimes long-term investments in equities, or, you know, whatever the case may be. So just realize that there's multiple ways that you can approach this. You don't have to be like all one or the other. You can be one or the other in the beginning to figure out the skill set, you know, get used to one skill and then go on to another one. TLT, bonds continue to go down, and so we got bonds going down, right? And so when these bonds are going down, the amount that someone is willing to pay tends to go up because people not buying them, so they have to make it more attractive. And then it would seem that when it becomes more attractive, money starts flowing out of stocks and potentially into bonds. However, like if you look at a lot of things that are going on in a macroeconomic sense, do people really want to own these bonds? You know, maybe that's why you can get a better yield at 5 years than you can at 40. You know, I don't know, why would someone pay less, but this seems like it's pretty good. 13 weeks, almost getting 4%. You know, that's not too bad if you believe that the US government's going to fulfill that promise for you in 13 weeks. So if these bonds keep going down and we keep seeing the VIX stay kind of around this 30, right? If we don't see it coming back down to 20, and we see the this MMRI keep creeping up closer to that extreme level of risk, then we might be looking at a significant drop in the stock market. Hey, things could reverse, or things could kind of keep going sideways. They can cruise along in this level of kind of unhealthiness for a while. Have you ever seen someone or known someone with bad health that lived a long time and just like they lived with bad health? You know, sometimes that's what happens. Oil is oil kind of shot back up above this 20-day moving average, and seems like it's liking this zone right in there, and that's good because I'm getting ready to close out this put option that I sold down here. The strike price I sold it at isn't even on here, but you know, with the margin of the futures, boy, woohoo! If it goes against you, like it's pretty quick that your trade can turn negative. Gold, all right, seems to be catching some support right in here. But I tell you what, I would love, man, go down to 800 bucks, man, please, please, please. But again, the paper price doesn't mean, like, if you want to buy an ounce of gold, doesn't mean you're going to get it for this paper price. So how could you do that? Or how could you take advantage of this paper price? There's a variety of ways. One simple way that I've learned about is, let's do it right over here. one simple way that I learned about is looking at the dollar. Chart the dollar. Let's put it at a 1 year. All right, so this UUP, this is what we look at over here to represent the dollar, right? However, we're going to use the Yahoo charts because this one, the only thing I can put on there is S&P 500. But on Yahoo, we can, let's put on GLD, this ETF for gold, just to kind of get a look. So you notice as the dollar goes up, gold tends to go down. So you can have an indicator. An indicator being you can watch the dollar. If the dollar is going up, then maybe you could potentially put whatever the dollar is doing, you could put different types of trades on gold ETFs, gold mining stocks, whatever the case may be, right? Maybe you buy put options. Maybe you sell call options, right? Selling call options is the same. It's basically taking a downward position on it. Maybe you just straight short stock. Maybe you want to buy for the long term, so you're watching the dollar go up, you're watching your whatever gold type of stock go down, and maybe you sell cash secured put options even lower. So as this gold price keeps going down, you're selling kind of out of the money or wherever you can kind of get some premium, and if it comes to you, if this keeps shooting up and that shoots down and you get paid premium in the meantime to wait, there's a variety of things that you can do. But it's nice because if you want to trade, let's say you want to trade Facebook, what can you look at? Can you look at I guess you could look at the dollar. You could say if the dollar is going up, then Facebook, maybe is going down. But I don't think that those other companies have the same relationship that tends to happen here with gold and the dollar. But there's times where it doesn't necessarily work. Look at this time. Gold was going up and the dollar was going up. So you kind of, all this type of stuff, I mean, I think if any of this stuff was a guarantee, then if it was a guarantee, then we wouldn't have had this happen, right? If all this trading stuff was a guarantee, then why would all these day traders go back to their day jobs? This year's tumultuous stock market has seemingly zapped retail traders' enthusiasm. The average daily number of retail trades on Charles Schwab fell to its lowest level in 2 years. Right? What happened 2 years ago? People got all this PPP money. They were home. They started trading online, all this type of stuff. And if it was so easy, why didn't they just keep doing it? Right? If it was that easy, why didn't they keep doing it? Even here, Robinhood CEO is talking about how in 2020, 2021, people are really interested in investing in stocks. Maybe they didn't learn how to invest. Maybe they were gambling in stocks. And there was a widespread participation in the stock market. Now people are talking about gas prices and inflation. So if this stuff were that black and white, why would all these people be going back? Do you think they really want to be doing that? No. Probably rather sit home and make money versus go somewhere else and have to wear a uniform that you don't necessarily want to wear. So let's close this off looking at Bitcoin. And obviously things are real funky loading. Okay, Bitcoin, and it's still doing the same thing, right? We're not closing above this 20,000. Anytime it tests this 20,000 range, it's just kind of getting beat down. I mean, it's testing 19,000 right now. I apologize. I meant testing the 50-day moving average, testing the 20-day moving average. It's just, you can see what's been happening. High, lower high. Bumped up a little bit, but really got lower high, lower high, lower high, lower high, lower high, lower high. What needs to happen in order to see a reverse in here? Well, ultimately, it's all about buying and selling. Ultimately, it's all about supply and demand. And right now, it doesn't look like there's more demand than there is supply. It looks like right now it's kind of even. So unless somehow some demand starts increasing somehow, and this is when you get into all these like speculative hypotheses and theses and all this stuff of like, well, this country is going to do that and blah, 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 all this stuff. And more than likely, if you're watching this video, you are not invited to those meetings with those countries. So you know what, when you hear people saying that and you're watching YouTube and some guy's telling you Bitcoin's going to 500,000 in the next 50 seconds, you got to kind of take it with a grain of salt. And one thing that would be interesting is to find out, how does this person get paid? Does this person, you heard of talking their book? Does this person have a lot of money invested in Bitcoin and needs to go on different media outlets and talk up Bitcoin so the price of Bitcoin goes up so that way this person makes a profit? Does this person get paid by Bitcoin companies? You know, who knows? I don't know. Maybe not. Just be cautious, right? Do a little bit of due diligence. And ultimately, if you don't want to do that due diligence, which a lot of times I don't, hey, watch a chart, because even if it's like manipulated money going into Bitcoin, if the price is going up and you're able to capitalize on that, just be able to watch that chart and sell before it goes down. Because maybe, let's look at a weekly chart. Let's see if that might do it for us. Maybe their amount of data, right? They don't really have good data in here. Okay, so looks like this is the most it's going to give us. So weekly chart, right? Each candle is representing 1 week of trading. Now, what you don't want to do is this. You don't want to be holding this. And that's what some people have done. Some people bought into the narrative when it was at 65,000. Hey, it's going to $1 million in 2 months. Oh yeah. Well, it seemed like it went to 19,000. Some people could have cashed out up here, but instead they're listening to YouTube guys and they're listening to YouTube salespeople, not YouTube sales, Bitcoin salespeople, or whatever, Tesla salespeople, or whatever asset it is. You got to realize that some people they're out there pushing information not because it's necessarily true, because they're trying to drive that price up by getting people excited to create demand, right? And right now, what do we see? There was more demand here than there was supply, so the price went up. That's not what we see here. We see more supply than there is demand, and the price started going down. So maybe we've got an equilibrium. You can really see it kind of, it's not even getting to this 25. It looks like maybe the market price might just kind of be in here in this right around $20,000 level. Who knows? Could drop lower. It could go higher, but it's definitely, if it's going to go higher, again, it's got to be closing. It's got to be closing consistently above 20,000. It's got to stay above 20,000. It will not get to $1 million per Bitcoin if it can't get to 20,000. If it can't get to 30,000, it's not getting to $1 million. It's just unfortunately the way it is. No matter how much people want to believe in Santa Claus, it's just the way it is. So the quicker you can let go of your opinion and let go of other people's opinions, or let go of other people's narratives, then you don't have to let go of your money. When you let go of your opinion, or when you hold on to your opinion, sometimes you let go of your money. So wouldn't you rather hold on to your money and let go of your opinion? Consider that. The other thing that you can do that will be super, super helpful is to paper trade. test. Like if you feel your opinion's right, paper trade it, prove it, validate it to yourself. You don't got to prove it to me. You don't got to prove it to the internet. You just got to prove it to yourself. And once you prove it to yourself, you validated that your thought process is accurate, then you can put real money in. And then maybe you won't be one of these people. Maybe you won't be the quote-unquote day traders going back to their day job. So in order to help you do that, consider going here, download this stuff. I'll send you stuff, and we'll become really great buddies. Have a fantastic day. Bye-bye.